Hello everyone and welcome back to another video. In this video, we're going to take a look at the hype behind the AMC stock. Listen until the end of the video to get the complete view on why this stock has been all over the news. Make sure to like, subscribe, and hit the bell for more videos. Now let's get into it. It would appear that AMC Dakota Square 9 in Minot, North Dakota has nothing to do with Silver Lake Partners. After all, the movie theater is situated in a metro area so remote that it's 5 hours away from its closest major city, Winnipeg. The Great Tomato Festival is among the town's claims to fame. Meanwhile, Silver Lake is one of the world's biggest shareholders in tech, managing assets of $75 billion from its HQ in Menlo Park, California. But last week, the stock market rally fueled by the Wall Street Bets subreddit community improbably brought both together and helped them. Silver Lake's willingness to turn a $600 million debt note from AMC into stock was also caused by the boom that pushed the share price of AMC Entertainment to new heights. That removes the principal and all potential interest charges from AMC to Silver Lake, and helps sustain Dakota Square and many of its 595 other locations nationwide, owned by the pandemic-battered movie theater chain, the largest in the country. The production is part of an investor narrative that converges in unprecedented ways with Main Street, Wall Street, and the internet pathways, and perhaps even redeems moviegoing in the process. The surge also allowed AMC to issue $304 million in new stock last week, in relation to the Silver Lake transformation, as its stock became more appealing to investors. If AMC was made an unintended target of powers outside its control by the coronavirus, then Wall Street's bets is kind of a karmic payback. A chance at new financial life for reasons that had little to do with it as well. AMC was really in danger, unlike GameStop, said Michael Pachter, an analyst at Wedbush Securities, a financial services company that closely tracks the movie theater industry. They didn't intend to, he said of the Wall Street Bets party, but 100% of them threw a lifeline at AMC. On Tuesday, before creeping back up 3% in after-hours trading, the share price dropped 41% to finish at $7.82. Although the fall could impact the ability of AMC to issue fresh stock, the financial benefits of the previous week's rebound, both the debt conversion and $304 million in new stock, well, that can't be reversed, meaning that the firm already has all of the required weapons to prevent bankruptcy. Yet concerns about AMC's future remain. In a report to shareholders Monday, Eric Handler, an analyst at MKM Partners, said that AMC's then $13 share price was decoupled from the reality of its business. He set a share price aim of just $1. But Pachter and other analysts now assume that AMC can get to September at least, when several experts believe that mass filmmaking will have resumed before raising any new capital or substantially reducing it, a thought difficult to imagine only a few months ago. Even before the pandemic, AMC was a troubled company. In comparison to more intentional rivals Regal and Cinemark, AMC in the United States and around the world has expanded steadily in recent years, moving from 5,400 screens worldwide in 2015 to 11,000 in 2020. In the United States, it has renovated several of its theaters. It started last year with a debt of around $5 billion on sales of $1.5 billion. The pandemic, which dramatically cut back sales from the tickets and concessions, tightened the vice. Studios started to delay their releases or switch them to streaming platforms. Involvement was restricted or banned by governments, and customers remained largely at home. In the third quarter of 2020, the most recent time for which results are accessible, AMC's revenue was down 91%. Debt has swelled to $6 billion or so. Lately, the business said it was spending $125 million a month to cover employees, repairs, and lease expenses, with very little profit in return. Make sure to stay until the end of the video to learn about how Wall Street could possibly save the entire generation of AMC. Last month, Americans invested just $60 million at the box office, which would mean that AMC would end up with just $7.5 million from ticket sales, with only a third of the country's screens and needed to share the revenue with studios, plus any limited concession sales that went with it. Reorganizations of bankruptcies appeared highly possible, experts said. That would allow the company, presumably only in more viable markets, to cancel all its leases and start fresh. Many AMC locations will then be closed by rivals or bought up. But things have recently started to turn, slowly, and then very quickly. The company reported a week ago that it had raised approximately $400 million in debt capital through the extension of a credit facility linked to its Odeon chain in Europe, along with $500 million over the subsequent 6 weeks through a host of financial initiatives, including new stock and reorganized loans. "The sun is shining on AMC today," Adam Aron, chief executive and chairman of AMC, said then. Some of the money it raised, however, was costly. A $100 million loan it took from Mudrick Capital Management, which specializes in distressed assets, came with a very high interest rate of 15%. Any talk of an imminent bankruptcy for AMC is absolutely off the table. And then, Wall Street's bets happened. Members of the famous stock trading community on the Reddit website began talking up and buying AMC stock in a bid to put the squeeze on hedge fund short sellers. The share price of AMC almost quadrupled to $20. As some stakeholders wanted to cash out, it then went on a roller coaster, and investors were barred from trading on the Robinhood trading app for a while. But it still closed trading at $13.37 on Monday, up 162% from its $5.09 price a week earlier, before collapsing again on Tuesday. These higher prices enabled both the conversion to Silver Lake business, turned the move into a 19% profit, and allowed AMC to raise $304 million by selling new stock. It was a striking turnaround from a time not long ago when it looked as if AMC might soon be en masse closing down all locations. No matter what happens to shareholders, who analysts said might be in for a crash, a cruel destiny for the local AMC theater can now be avoided by many communities across the country. Wedbush's Pachter believes that the opportunity to operate continuously deeper into 2021 would enable AMC to get to a point in the calendar when coronavirus vaccinations will be commonly accessible and customers would finally return to theaters. With the recent Fast and Furious movie F9 and the Marvel picture Black Widow scheduled for May, and the long-awaited sequel Top Gun: Maverick set for July, studios have indicated their support of this timeline by preparing a slew of movies for the second and third quarters. Some analysts do remain skeptical. The financial moves of AMC, they say, do not resolve the wider problems of streaming, filming, the pandemic, or more directly, for AMC, all the money it owes. Handler, the MKM analyst, said that there is still approximately $5.7 billion of debt, a total which is increasing each quarter due to unpaid interest payments. He stated that there's also the overhang of $450 million of unpaid rents, which will eventually need to be taken into consideration, referring to the company's choice to withhold rent for many sites during the pandemic. An independent theater owner, talking on the condition of anonymity, so as not to appear to be criticizing a rival, said he believes that even with the new cash, many AMC theaters may be available for purchase as the company seeks to pay down that debt. Well, that wraps up today's video. AMC may be on the brink of bankruptcy, but with a stray of hope, the popular Reddit thread may be able to save them. If you enjoyed this video, make sure to drop a comment down below, and don't forget to like, subscribe, and hit the bell for more crazy stock news. Until next time, peace.